What is a tax extension and how does it work? Actually, filing a tax extension is very common. Millions of people do it every year, including us, and we recommend it for many of our clients too. A tax extension simply means letting the IRS and your state tax department know that you need an additional 6 months to finalize your paperwork. But remember, this does not mean you get extra time to pay your taxes. Your tax payments are still due by March 15th if you have an S-Corp, and by April 15th if you are an individual or a C-Corp. Now, you may be wondering, if I haven't finished my paperwork, how do I know how much to pay? The key here is to prepay as much as possible. For example, if your accounting shows you usually owe about $5,000, then it's better to pay that amount up front. That you also need to remember to send the state tax department money too, not just the IRS. If later, when you file in September or October, it turns out you only owed $4,000, the IRS will refund the extra $1,000 you paid. But if it turns out you owed $6,000, the IRS will expect the additional $1,000 plus penalties and interest. So, why do so many people use extensions? Because tax season is hectic and no one wants to rush. Filing quickly often leads to mistakes, missed forms, or incorrect filings, which can cause delays, amendments, and extra fees. It's much better to pay your estimated taxes on time, then take the extra months to carefully gather your documents, review your deductions, and file confidently later in the year. Extensions give you until September 15th for S-Corp and October 15th for personal and C-Corp taxes. That's a full 6 months to get everything right. But don't forget, an extension is more time to file, not more time to pay. To avoid penalties and interest, always pay as close as possible to what you think you'll owe by March 15th or April 15th.